Investing in cryptocurrencies is like stepping inside a room filled with you don't actually know. But we're not here to discourage you. In this video, we're going to show you how you can make millions even if the crypto forecasts huge crashes ahead, or at least if you can predict. To start with, all of us should fully comprehend that a crypto market crash is absolutely natural because the market's nature is subjected to extreme risks that make it susceptible to sudden shifts, be it up for gains and down for losses. Like any investment, be it in a traditional banking system or crypto markets, a market crash can have either positive or negative consequences. Here's an example that can make you understand better. There are two competitors in the market selling the same product. If one of the competitors loses customers as the other gains, solely due to an influx of demand, so one benefits while the suffers. In the same way, when the prices of several cryptos collapse or start collapsing, it opens up plenty of new opportunities for investors. A crypto market crash could indeed bring in billions of financial gains in ways to expand your portfolio if managed advantageously. We have seen this happening right in front of our eyes. Bitcoin had a huge surge in 2017, which led the cryptocurrency to trade profitably for 3 years before it actually experienced a collapse just at end of 2020 and the beginning of 2021. It evaluated to $31,000 by the end of 2021, which was less than it started at $61,000. The valuation then managed to recover to set a new high of $69,000 in November, but now it's down to $43,000. Investors are concerned by the crypto's performance, and some are even scared to lose out, so they withdraw just in sight before another crash. Crypto cycle, we must all know. A cycle can be determined when there is a starting point, a growth point, and a fall point, be it in business, life, investments, etc. Here, the crypto market is like a boom and bust cycle. It grows, it falls, and vice versa, but at enormous rates due to unexpected bullish investment techniques. The bull investment form forces investors to either sell all their holdings or buy more. Anyway, in any investment surrounding having a strategic plan in place can make even a market crash a great opportunity to make gains in investment. We've witnessed what all these coins are capable of when the conditions are favorable time and time again. It's not always clear to predict when those opportunities will occur, but it's known that dips within market like this can offer amazing opportunities. So here, we've coined 7 ways where you can make a bag full of bucks even if there's a huge crash just ahead. Number 1. Prepare ahead of time by analyzing and understanding your risk tolerance. Investors must have a firm understanding of their risk tolerance levels before the next crypto market meltdown occurs. The cryptocurrency market is extremely volatile, and it is prone to overnight price swings. As a result, when a sudden fall comes, investors must be prepared with a risk management plan in place. Take, for instance, in 2018, 2020, and 2021, Bitcoin prices fell by more than 80% in 3 separate times. It has already seen multiple significant price decreases this year alone. There will almost certainly be other crashes in the decades ahead. Even though BTC has frequently recovered from slumps to reach all-time highs, this is not a given circumstance, and there is no guarantee that it will always do so. As a result, evaluate whether you can tolerate the level of risk before making investments in any cryptocurrency. Investors should keep in mind that adopting the safe option does not imply failure. If you're comfortable with all of the risks, crypto is the right investment for you. Number 2. Reconsider your investments. There really is no such thing as a bad time to reevaluate your investments, but a down market is a particularly good time to do so. Reevaluating your investments requires diving deep into your initial investment theory and reshaping your financial goals. Additionally, it is important to determine if the same goals that exist now are worth the market value. Though a short-term crash may not affect the crypto token you've invested in, it's always a good idea to double-check whether any of your crypto investments have been compromised. As a result, if a crypto market meltdown is imminent, now is the greatest moment to examine your investment portfolio and, if required, update it. Number 3. Cash out. You should have enough money in hand if you wish to seize opportunities presented by a crypto market crash. When you suspect a crypto market crash is approaching, you will notice that several crypto traders and analysts will recommend trading out digital assets for fiat currencies, but only do this if you can precisely time your exit and re-entry into the market to make your profit. Without thorough research and practice, it is impossible to speculate on the market. This will require you to make a lot of strategic moves, research, and analyses based on past market trends. Number 4. Brace any impact, crash, and fall. When people learn that a crypto market crash is imminent, the first emotion that immediately springs to mind is panic. Panic selling occurs when an investor sells everything he or she owns in order to decrease their losses. This can lead to a loss of money, and increased selling activities will only further decrease market prices. If you think a crypto market crash is imminent, the best thing you can do is remain cool and prepare. Hanging on to your valuables until the crash's waves decrease over time is a simple action to take. If you can withstand the market crash by holding your assets, you'll most likely see a reasonable profit on your investment in the long run. Number 5. Invest in low-cost cryptocurrencies when the economy is still recovering. Most market participants and investors often seek well-known cryptocurrencies with high trading volumes. Always remember that there's a myriad of cryptocurrencies available that are both inexpensive and have significant future development potential. With several cryptocurrencies like altcoins that are currently trading at cheap prices, you could take this time to diversify your portfolio by developing strategic transactions. Other undervalued cryptocurrencies like Tron, Uniswap, Chainlink, and many others can also outperform growth in the early phases of an economic recovery and are therefore a wonderful option to diversify your investment portfolio. Number 6. Dollar costing averaging technique. What most investors do is, once they find a coin they want to buy, they put all their money thinking there's no possible way this would crash. But you're merely looking at the tip of an iceberg, because it just might crash one day, and the next thing you'll know is that your money is in the drain while you're trying to stand up from the shock. Do not do this. Instead, follow the dollar costing averaging technique to build your position, and then gradually take steps up further. The amount you invest from the start should stay consistent, especially during an economic recovery. Though you may not gain instant profits at one time, in the long run, you'll stay safer, and also, your money could just make you richer than yesterday. Number 7. Just as how Warren Buffett and Peter Lynch invested. With Bitcoin down more than 50% and many other cryptocurrencies down 20% to 30%, now is the moment to buy proven assets at substantial discounts. Warren Buffett, the greatest investor of all time, has made billions by employing this strategy. He often told investors to be fearful when others are greedy, and greedy when others are fearful. Where he meant that if the market crashes, you needn't be fearful. Instead, be greedy and buy the dip. A source from Bitcoin Dread and Greed Index also stated that investors are now experiencing severe fear when making crypto investments, but for smart and diligent investors, it's actually the perfect and excellent time to bargain search, or at the very least begin a weekly or monthly dollar cost averaging program to balance out your investment entry points within crypto. Yes, it may sound paradoxical, but that's how you do the buy low, sell high. As we previously mentioned in the video about the BTC crash from 2020 to 2021, what do you think was the best time to buy Bitcoin? Was it during the time when the BTC reached its all-time high of $69,000, or during the time when it plummeted to $4,000 per coin? Comment your answers down below. Investing in crypto could be a sensible move if you trust in the underlying technology and believe it has a bright future. Before making any decisions, be sure you've done your homework and are aware of the hazards. If you like this video and also enjoy watching our content, like, subscribe, and share.